Market Overtime. I'm Nicole Petallides. Today's guest has called for a 30% sell-off in the markets. In fact, she said that right here at the New York Stock Exchange desk, and that was back in September of 2024. Despite that call, she still sees opportunity amidst the volatility investors have dealt with so far this year in 2025. Joining me right now to dive into it all, Rebecca Walser, President, Walser Wealth Management. So glad you're here.
Thanks for having me, Nicole.
So you really shocked everybody last fall when you started talking about a 30% pullback. And of course we went a little higher after that, but you felt like things were shaping up in a negative way.
Yeah.
Sort of rewind to that time to where you are now.
Well, back in September, that was obviously pre-election, and so we had no idea which way it would go. But I had a feeling that if we went, with a change in direction, that the market would be really optimistic on a new Trump 2.0 administration, and that, optimism would carry through to the new year, but then we would start to see implementation of policy, and that's where the volatility would come in. Really, though, Nicole, the 30% pullback is really much more macroeconomically related to all of the currency that was printed post-coronavirus, like 2020 through, I would say, 2022, and really that currency truly being absorbed by the world economy, creating inflation, creating a new standard of, price that people don't understand. And then you have all of the real estate issues and impact on that, because we have so much real estate that has to even get refinanced in 2025, and interest rate policy and all of those things. So really what we're seeing is a global macroeconomic shift away from the West and the US European kind of dollar alliance to the east, and that really is more telling, along with geopolitical potential actions. But obviously with this new Trump administration, we've had a lot of volatility with all of his implementations.
So there's so much to digest here. I mean, the big picture here is you're concerned globally about the inflationary story here at home, the strength of the US dollar or lack thereof, and the competitive space.
Yes.
And you've seen people, let's say, running to gold.
Absolutely.
You've mentioned that, and you talked about that some time ago. You talked about the paper versus the gold bars, and we've seen it soar since you started talking about that, and you still think there's room to the upside.
Absolutely. We've been gold bugs, really. I would say, well, I've always believed in gold and silver as a true hard asset class. But outside of that, as part of a portfolio, Nicole, I definitely think that gold is a stability factor when you're going through inflationary price, problems with inflation globally. And so what we're seeing, and then you also have the other impact that we didn't really talk about before, was Basel III. So Basel III really talks and moves gold from tier 3 to tier 1 asset on the central bank's balance sheet. And so what that means is it leverages and gives them more opportunity to secure their reserves. And so that's an implementation that's been going on globally. We are having problems here in the United States implementing it because obviously the banks have pushed back and told Powell, we can't implement Basel III. So that is to be determined in the United States.
Still a gold bug.
Still, very much.
Still on board for the 30% pullback.
Yes.
Now, of course, in the first part of 2025, we were saying 10% plus. We saw corrections in the major averages. Is that the beginning of more to come?
Yeah, it's the beginning.
When does this happen, do you think?
Obviously the timing is all that matters. We've seen tit-for-tat reiterations from Trump's administration putting forth policies, and we've seen other countries respond to that policy, and then we'll see our country respond again, and that has to all be ironed out and get more smooth. That causes current volatility, as we know, but really it's not going to change the overall dynamic that we've just printed too much, too fast, post-coronavirus, and the world is digesting that, and it has also caused realliances on currency globally that will not be undone. Like the fact that our dollar is now like 56% of Forex reserves and dropping at a speed that we haven't seen in ever, right? Since 1944 Bretton Woods. It's a problem, Nicole. So people are thinking that AI, we had that whole AI kind of like frenzy, kind of reminds me of .com, really. And irrational exuberance, I would remind people of Alan Greenspan's wording. And the fact is that when you look at AI, does it have the runway? Does it have the capability? The truth is it is new. It's revolutionary. You combine AI with quantum computing, cloud computing, data centers, robotics, and new algorithms, and you have the longest runway ever, probably. It's the fourth industrial revolution, but it's not yet monetized. And then you have things like DeepSeek coming in and undercutting American producers, that gives us a problem and a pause on how do we monetize AI to our fullest extent if China's going to be right there stealing our IP and doing it cheaper.
So this 30% call, are you sticking with that number?
I am.
I mean,
I am.
So you're going to. So it's not 20. It's not 40. I mean, you're sort of still in this 30% range.
Yeah.